The story of the most powerful empire of the 19th century doesn't begin with kings, generals, or battlefields. It begins with something far quieter, almost invisible, a bank. A bank that grew so large, gained so much influence, and infiltrated so deeply into the foundations of an empire that when it finally fell, it dragged down part of the political and economic strength of one of the greatest powers in modern history. The curious thing is that almost no one talks about it. You've never seen it in traditional documentaries. It rarely appears in school textbooks, and its name isn't among the most remembered financial institutions of the era. But its existence, and especially its collapse, changed the course of global geopolitics. It wasn't just a bank failing. It was an empire taking its last breath without realizing the air had already run out. It all begins in the mid-19th century, when Great Britain was unquestionably the most powerful country on the planet. It was a center of global trade, master of the sea routes, the heart of the international financial system. The nation that controlled territories so distant from each other that it was said the sun never set on the British Empire. London was the core of that system. And within London, there existed an institution that symbolized the credibility of the United Kingdom, the Bank of England. But many don't know that, simultaneously, another bank, far less famous, was growing at a frightening pace, Overend Gurney Company. Officially, it was a kind of intermediary specializing in bill discounting and letters of exchange. But in practice, it became the largest silent influencer of British credit. To understand its rise, it's necessary to grasp the economy of the time. The 19th century was the height of the Industrial Revolution. New technologies emerged almost daily. Companies were created constantly, and money needed to flow fast so nothing would stop. Traditional banks were too conservative to keep up with this frenetic pace. But Overend Gurney wasn't. It did exactly the opposite. It offered credit easily, financed risky ventures, lent large sums based on expectations rather than collateral. It became the favorite of industries, merchants, investors, and even some smaller banks. The institution began to be seen as a banker's bank, a safe haven for anyone needing quick liquidity. And that's exactly where the problem begins. The more successful it became, the riskier it allowed itself to be. Behind the facade of stability, Overend Gurney was conducting increasingly speculative operations. It invested in railways, shipping companies, firms that promised absurd profits but had barely begun operating. Britain was in full railway mania. Lines were being built in every direction. Investors poured money relentlessly, and the promise was simple. Connecting cities meant connecting wealth. But the railway market was flooded with unviable projects. Many lines had no real demand. Others would never be completed. For sensible banks, it was a questionable investment. For Overend Gurney, it was an irresistible opportunity. Over time, its risk exposure grew so large that any market fluctuation could be fatal. But the bank had something that kept it artificially protected: public confidence. It was seen as solid, respectable, almost infallible. And when the public believes an institution is invincible, it gains more power than it actually possesses. That's always dangerous. Overend Gurney spent years maintaining an image of security while hiding a fragile and unbalanced reality. The entire British Empire, without realizing it, was resting on an unstable structure. The year 1866 would mark the moment when this illusion finally shattered. It was that year when the bank decided to convert into a joint stock company and go public. In theory, this should strengthen it, guaranteeing a massive injection of capital. But the opposite happened. Opening the books meant revealing part of what had been hidden, and the numbers weren't pleasing. Investors realized the bank wasn't as solid as it seemed. Worse, they realized it was involved in extremely risky operations, with little liquidity and little security. When the financial market begins to distrust, quicksand forms rapidly. Shareholders, fearful, began selling their shares. Customers began withdrawing their money. And Overend Gurney entered one of the worst possible scenarios for a bank run. Money was flowing out faster than it could replenish. And since most of its assets were in long-term investments, it had no way to convert them immediately into cash. The directors, desperate, rushed to the Bank of England asking for help. And here's the most decisive moment in this story. The Bank of England said no. The refusal was a shock. The Bank of England had always helped struggling institutions to protect the system. But this time, the directors decided not to intervene. Perhaps because they wanted to set an example. Perhaps because they believed Overend Gurney was too big to fail, even without help. Perhaps because they didn't imagine the domino effect that was about to happen. Whatever the reason, that decision changed history. On May 10, 1866, Overend Gurney Company officially collapsed. The doors closed. Employees were sent home. Panic spread instantly. London awoke under the shadow of a financial disaster. Companies went bankrupt. Investors lost fortunes. Thousands of people lost their jobs. But the impact didn't stop there. The bank's fall triggered a devastating domino effect. Smaller banks failed in sequence. Credit lines evaporated. Investments froze. Commerce slowed. It was as if someone had unplugged the economic engine that moved the empire. The shock was so great that newspapers at the time described scenes of chaos in the streets. People running to withdraw money from other banks, merchants closing shops for fear of looters, investors desperately trying to save what they could. Confidence, the most essential element of a financial system, had been destroyed. And without confidence, no economy can survive. Great Britain plunged into a deep crisis. The recession spread throughout the empire. The colonies felt the impact. British global companies reduced operations. Railway construction plummeted. And politically, the country suffered tremors that would echo for decades. All because one bank, just one, had collapsed. But perhaps the most interesting element of this story is the legacy the disaster left behind. The fall of Overend Gurney made the Bank of England realize that its decision not to help had been a grave mistake. And it was from that mistake that one of the most important rules of modern economics was born. The concept that central banks must act as lenders of last resort. In other words, if a bank too big to fail is on the verge of collapse, the central bank needs to act, even if it doesn't want to. Because, contrary to what many imagine, large banks don't just affect their customers. They affect the entire country. This principle, which today seems obvious, didn't exist before. It was only created because the United Kingdom saw what happened when a gigantic bank falls alone. The crisis of 1866 didn't just break a bank. It broke the arrogance of a financial system that believed it was indestructible. It exposed the fragility of the British Empire at the moment it seemed strongest. And, ironically, it helped shape the global financial system we still use today. The most curious thing is that Overend Gurney disappeared from popular imagination. While names like Lehman Brothers, Goldman Sachs, and Barings Bank became well known, the bank that practically imploded the British Empire was forgotten. Perhaps because admitting its importance would mean admitting how vulnerable that empire really was. Perhaps because its story had no heroes, only mistakes. Or perhaps because collective memory tends to hide episodes that reveal weakness. But the lesson remains. An empire doesn't fall only through wars. Sometimes it falls when an institution no one question reveals it was built on weak foundations. Sometimes strength is just appearance. And sometimes the collapse of a single bank is enough for the world to realize that trust is the real currency that sustains a nation.